Mastery Powered by Seller app. We are on day 2, and believe me, if you haven't gotten enough rest after day 1, this is going to be intense because we are going to be talking about cash flow. So cash is very important for your business, especially when you are reaching towards Q4, where you expect a lot of additional expenses. Finding different channels to raise more money, to raise more capital is very essential. So in yesterday's session, we spoke about how you can scale your D2C brand and how you can be a part of D2C wave rather than being washed by it. So I think the sessions, the 3 power-packed sessions that we had yesterday were intense. They were so much fun to watch. If you have missed it, make sure that you watch yesterday's session after today's session because it's going to be really interesting. If you haven't already registered for the event yet, make sure that you go and check the link in the description below to register for the event because we have additional workshops and we have goodie bags that goes out for all the registered users at the end of the session. So make sure that you click on the link below to register for the event because we have limited seats remaining. So day 2 is packed with funding, all the cash related issues that you have and how you can solve them. So we have amazing speakers lined up. We are first going to be understanding how you can find different and alternative channels to raise capital for your business and how you can ensure cash flow, a positive cash flow for Q4. So help me welcome David from Capify and let's get the session started.
Thank you for the introduction. My name is David Goldin and I'm the founder and CEO of Capify, one of the world's first online alternative lenders for small businesses that currently provides capital to small businesses in the United Kingdom and Australia. And I'm excited to be here today to speak to the Seller app audience about the topic of cash flow crisis and learning about alternative financing to manage your cash flow. And essentially, before I get started, just a little bit of my background to add a little bit of credibility to what I'll be speaking about today. As I said before, I'm the founder of Capify that started the company as one of the world's first online lenders in the United States back in 2002. I expanded the business to Australia and the United Kingdom in 2008, scaled Capify to over 225 employees operating in 4 countries, and sold the US business to a competitor in 2017. I'm still active in the US online small business lending market as I partnered with a capital provider that provides capital to various online small business lenders in the United States as well. For Capify, I secured a £75 million credit facility, which is approximately $95 million US, with Goldman Sachs in 2019 to fund Capify's UK and Australia business. As stated before, I have over 20 years experience in the alternative business finance industry and considered an industry pioneer. I've been featured on various media outlets throughout the world and various television programs, especially with the topic of small business financing. So the topic of cash flow today and managing your cash flow. Cash flow is one of the biggest issues since the beginning of really businesses. And having a cash flow problem sometimes can be considered a first world or high class problem. There are plenty of growing successful businesses that have a cash flow issue. And it really comes down to a lot of key elements that can create a cash flow problem. From not proper financial planning, not knowing ahead of time some of the issues, declining profit margins. One of the biggest mistakes is people saying they're going to make up their business by selling more by lowering price. The problem is that puts pressure on cash flow. Poor inventory management. Again, if sales are spiking and you don't have enough inventory, that too can lead to a cash flow issue. Inflexible funding facilities. Many e-commerce sellers may have access to bank capital, bank credit lines, or other types of lending products that may just not operate well with their business. They may not be able to scale up or peak or move fast enough when demand kicks in, or if there's a huge growth spurt. And of course, seasonal variation. Not every business is consistent 12 months in the year. Various e-commerce sellers may have businesses with peaks and valleys depending on the season. So what type of financing exists out there for alternative financing? I'm going to focus, while there are several types out there, I'm really going to focus on a few that I think are most relevant to e-commerce sellers. Because the majority of e-commerce businesses take credit cards as a form of method from their customers, method of payment, I'd like to focus on the merchant cash advance product that's been around in the United States since a little before the year 2000, in Europe and the UK since 2007, 2008, Australia as well as early as 2010, and other countries around the world. It's also known as a business cash advance product. It's also known as an e-commerce advance. The beauty of this product is it works with your cash flow, and it's also known as seller-based repayment or sales-based repayment, where essentially it's a percentage of your sales is what you're using to pay the capital back. And you'll see companies as large as PayPal, Amazon, and Square, Shopify that offer these types of products to e-commerce sellers, as well as various small to medium-sized merchant cash advance or business cash advance providers all throughout the world. These products tend to have much faster approval rate than a bank and a much shorter repayment period than a traditional business loan, but again, works with a percentage of sales. There's peer-to-peer lending options out there in the world also, where a business can put up the opportunity, and it's really crowdfunding that used to start off with really retail investors, but that has migrated more to institutional investors. Where you see a lot of crowdfunding these days is not so much debt funding, but really more equity funding. Invoice factoring could be another product as well. That may not really work best for many e-commerce sellers unless you have large wholesale or B2B sales. Most e-commerce sellers, or many that sell directly to consumer, I think it's really going to be focused on either the merchant cash advance / seller-based repayment product, or a non-bank online lender small business loan that typically can feature daily, weekly, or monthly micro repayments, tend to be unsecured up to a certain size, and then eventually at a much higher level, many lenders or funders will require security, and essentially much shorter than a traditional bank loan. Could be anywhere from 3 months all the way up to 24 months. So really, as a e-commerce seller, what you need to determine is what type of working capital is right for your business. And really the best way to figure that out is really based on the ebbs and flows of your business, the amount of, for example, the amount of credit card sales that your business takes in every month. That may determine whether or not a merchant cash advance product is best for you versus a traditional business loan. Some e-commerce sellers prefer to have a fixed daily or weekly or monthly payment so they know exactly how much cash flow to manage. Other sellers prefer that percentage of sales repayment, as I discussed before, with the merchant cash advance or sales-based repayment product, so they know that payment's going to really be dictated for the most part based on how much sales there are. You want to learn how quickly do you need the funds. Many of these providers can provide you funding same day within 24 hours or up to 24 to 72 hours. And really want to learn if there are any prepayment penalties associated with this type of funding, as well as the credit impact applying for this type of loan. Most of these loans that are unsecured will require a personal guarantee from the owners of the company. So that's something else to keep in mind. So what is the reason e-commerce sellers and business owners use alternative finance? I think the number one reason is really, well, two reasons, is really speed and flexibility. Unlike traditional lending, and depending on the country you're in, some banks can take anywhere up to days, weeks, or sometimes a month to provide a credit loan or business loan, especially for an e-commerce business. And that may mean losing out on an opportunity that you may have where you don't need the capital at that point anymore. There's no shortage of alternative lenders, online lenders in the markets that most e-commerce sellers operate in. Decisions, as I said before, can be as fast as real time to 24 hours. Funds available typically can be as fast as same day or within a few days. Much more simplified process. It's now 2021. Most online, or by definition, most lenders have an online application. Many lenders have automated decisioning, credit scoring models, and depending on the product, flexibility with payment terms, being able to give you options with either a fixed payment, with the frequency either being daily, weekly, or monthly, or a percentage of sales, which typically would be a daily percentage of sales product. And many of these companies are really familiar with e-commerce platforms, e-commerce businesses rather, and the ability to really cater to an e-commerce business and their needs, and really understanding compared to a bank which may focus on a traditional business or really not have as much understanding for e-commerce sellers. So what do most small businesses use alternative finance for? Could be a real variety of things, but the most common thing that we have seen at Capify over the years has been for either advertising, really ramping up, whether they're doing paid Facebook, pay-per-click on Google or Bing, and really inventory, having the ability that access to capital right away. In some cases, investing more in technology, investing more in staff, perhaps new product lines, perhaps expanding into new markets. And a lot of people really take the money, as we've heard, for a rainy day, especially what we've all seen in the world in COVID. A lot of business owners are really looking ahead and preparing properly and making sure that they have a buffer of cash for a rainy day with all the uncertainty and lack of visibility at times of risk in the world today. So for those that are interested, how can Capify help? Capify offers two of the products I discussed, one being the merchant cash advance product. We offer that directly in the UK and Australia. And the business loan product we offer in both markets as well. Could be as small as, depending in the UK or Australia, £2,500, £5,000. In Australia, $2,500 to $5,000, all the way up to £500,000 to £1 million in the UK, and similar to Australia. We have various repayment methods. Could be fixed daily or weekly. It could be a percentage of sales daily. And then for those e-commerce sellers in the US that don't have a solution, as I mentioned before, I have a vast amount of relationships as well. So please feel free to reach out to me on LinkedIn, David Goldin, founder and CEO of Capify. And if you want to know more, our contact information is listed on the present seller app presentation, or you can go to capify.com, that's CAPIFY.com, and select your market, either Australia or the UK, for Capify directly to see how we can help your business. Thank you very much for your time.
That was an amazing session, David. Thank you so much for your insights. I'm sure that Capify has helped a lot of sellers and Amazon sellers raise capital for their business. So thank you so much for that session. So moving on, we have Klaudia from Hellotax, who is going to be talking about VAT compliances in different countries and how you can save up money on taxes. So of course, a VAT system specifically in the Europe is a bit complicated after Brexit. So Klaudia here covers everything that you need to know about European tax system and more. So let's welcome Klaudia and hear what she has to say.
Hello, and thank you so much for the introduction. And welcome to this webinar about staying tax compliant in European market and automating VAT issues. So I'm Klaudia Maria Bretta, sales consultant at Hellotax, already 2 years there, and I will be happy to share with you all these quite difficult topics. Okay, we take a look at our agenda. So we will speak about the tax compliance expansion challenges that needs to be considered, the reason to register for VAT before the 1st of July, so the OSS, and after the 1st of July, the one-stop shop changes for European sellers, one-stop shop changes for non-European sellers, and about how to get a free VAT consultation with us. Okay, so what problem are we solving? So we are helping online e-commerce sellers to expand into European market and to help them with the taxes, with the VAT in Europe. So e-commerce businesses selling into European Union need to, first of all, know the VAT liability, so from the past and in the present, in all the European countries in which they are operating, in which they have business activity. They need to register for VAT in different countries, okay, and do the VAT returns in those countries. Following the different calendars and regulations that changes from country to country, even if we are in Europe. Get a view on goods movement, this is really so important, and take a look also on the sales channel, so have a complete visibility on all the sales channel and how they are performing in different regions or in different periods. Also, this is really important. So yeah, as said, each European country has different rules, as well as you can see different VAT rates. So you can see we are going from an 18% to a 28%. So yeah, and this really changes from country to country, as well as the regulations and quite a lot of processes. Also, the VAT registration is different from country to country. And speaking about two countries in which we provide the service, Poland and Spain, we can see that Poland, the process is really quite easy and quite quick. Spain is really more difficult and complex and longer. So really things can change from country to country. So, okay, reasons to register for VAT. So there are two reasons, especially there were two reasons in the past. So in the past, before the 1st of July, there were the distance selling threshold. So all B2C sales to a country in 1 year were counted. And there were VAT thresholds that were different in every country. They were going moreover from 35,000 euros net per year to 100k. But as you can see here, this rule is no longer valid from the 1st of July with the introduction of the one-stop shop system. So, and we will talk about this later. But if you're storing in a country, okay, from the first unit stored, you need to be VAT registered in this country, and this is still valid even after the 1st of July. So, for example, if you store in France, Italy, and Germany, you need to have these 3 VAT numbers, even right now after the 1st of July. So, one-stop shop, in which country you need to register? So, if you are a European company, it's not difficult. You can register only in your home country for the one-stop shop. But things changes for non-European companies. So, non-European companies can register in the place or in one of the places of their business activity. The choice is valid for the year of making the choice and the 2 following years. And the country that is chosen is called the member state of identification. Okay, so going back to the threshold. So European companies with one place of establishment in Europe, so one country of storage, basically have one European distance sale threshold of 10,000 euros. And this threshold is considered as met if it was met in previous year or in the current year. But things are quite different if you are a European multi-storage company or non-European company. And based on the explanatory notes, multi-storage clients do not have a threshold limit, and they need to calculate VAT based on the destination country. So these are really important things. Okay, another topic that probably you heard about is online marketplaces collecting VAT. So the marketplaces can be made responsible of 2 types of transactions only. So the first one is quite easy. So when a non-European seller is storing in Europe and is making a B2C sale to European clients, or when selling products to Europe directly from non-European countries, okay, the whole order value is not exceeding 150 euros, okay. So these are the 2 types of transactions. And yeah, talking about the cycle of this, how does it look like? So we have the first transaction. So in the moment of receiving the payment, okay, the marketplace will buy the product from the seller, and then will be the marketplace that will sell the product to the final client. Then basically the non-European seller will get the net amount, so not the sale price, the net amount, so it means the amount without the VAT percentage of the country that we are speaking about. And then the marketplace will pass the VAT amount to the tax authorities of this country. So this is a little bit how does it look like. Okay, here another topic, what makes a marketplace a deemed supplier? So there are two levels of validation for deemed supplier, and if the answer to both levels of validation is yes, then this marketplace will be considered as deemed supplier. So first of all, is the marketplace participating or controlling at any stage at least one of mentioned topics? So terms and conditions of the sale, authorization of the charge to the customer for the supply, ordering or delivering the goods. So first level of validation. Second level of validation, does it provide more than one service in relation to the sale? So regarding the payment processing, the listing or advertising the goods, or redirecting the customer to other marketplaces where the goods are offered without any further involvement in the sale. So if the answer to both levels is yes, so the marketplace will be considered as deemed supplier. Okay, thank you so much. This was like a short explanation, short introduction to these topics. Of course, you can feel free to book a free consultation with us to discuss more in details these topics, or also your personal situation. And yeah, so really thank you so much and have a nice day.
Thank you so much for that session, Klaudia. It was an honor listening to you, and I'm sure that Hellotax is helping so many sellers out there save up on their tax and understanding VAT compliances in other countries as well. Really important session. Thank you so much for your inputs. So let's have a quick recap of everything that we have learned about today. So first we had David from Capify talk about finding additional channels for raising funds, ensuring positive cash flow for your business this Q4. Then we had Klaudia from Hellotax talk about VAT compliances and everything that you need to know to save money on VAT and taxes. So here's a little sneak peek of what's in the store for you tomorrow. So we have perhaps my favorite sessions happening tomorrow, starting from innovation in marketing, AI in marketing, and where the future of marketing is headed. And then we have another speaker talk about why your PPC campaigns are costing you too much money. And then we have how you can structure your campaigns in such a manner that will cost you less money in Q4. So stay tuned. Until the next time, happy selling.